GKFX Prime presents the Market Analysis Webinar.
Hello, welcome to the weekly webinar. As is often the case when we're just coming out of the weekend, Bitcoin was the big mover, dropped 15% and sort of flash crash over the weekend. It's off the lows a bit, but we'll have a look at the Bitcoin chart as we normally do towards the end of the webinar. Elsewhere, as we start the new week, bit of a turn down in the US dollar, and we're breaking some key levels in the major currency pairs. So we're going to have a look at all of those now. And obviously, with a weak dollar, we're seeing gold spike higher too. So we'll also take a look at that. Right, having a look. Let's have a look at the euro here. This is our daily chart. We referenced these two peaks as potential resistance in last week's webinar, and it was for 3 days. And as of the start of the new week, we've got a big bullish bar taking us not just above those previous peaks, but obviously above that key 120 handle. And interestingly, we've just paused for the time being at the 50% pullback level of this entire decline. Now, obviously, this latest stretch of price action is pretty bullish, but we do have to consider the fact that overall, we're still sort of downtrending, and actually we've made lower lows most recently, but we just confused the picture slightly with this big rally up and made a higher high above these peaks. So still interesting to think that probably there will be traders out there looking to sell into the strength of this decline. But it does appear that the euro's turned a corner. The dollar seems to be softening after a strong Q1, and overall bigger picture. There's a kind of an uptrending euro, and obviously ahead of that, those 116 lows that we talked about previously, it looks like some buyers have come in pretty strongly. And over the past 2 weeks, and now starting into the third week, we're getting euro strength. So it's a matter of how long that can carry on. Given the fact that we just broke the 120 handle and these two previous peaks, it would seem to me that the 50% level isn't going to do too much good, since we've already paused just below it. It wouldn't make sense to pause again, but who knows? But at the next big level beyond the 50% is obviously the 61.8, and that actually comes in at the 21 handle. So that's potentially more of a barrier. Even there, there's no major resistance in that level really. So then you're talking about a move back up to 122. And incidentally, for what it's worth, Goldman Sachs have upped their euro price target to 125 by the end of the year. That's by the end of the year. We're obviously still only just started Q2. Let's move over to the British pound, and the pound was it's been rallying for a while after that double bottom that we pointed out last week. It pretty much didn't put in a bearish day, and very interesting on Friday with this big turn lower and then the big finish near the highs. So that's a solid outside day pattern if we're looking at bar charts, which we can, which I don't often do, but if we have a look at that, you can see that the high and the low are well above and below the high and low of the previous two candlesticks, in fact. So that was a strong outside day covering two previous days. And then obviously on candles, we tend to talk about it as being a bullish engulfing pattern. It wasn't at the low, but we had those two matching lows towards the bottom at the double bottom, which we pointed out at the time, and then another confirmatory bullish pattern. And then we're just coming into this resistance around 139, which is obviously these two peaks here. And on the 4-hour chart, you can sort of see where the price action started to stall with this little candle here, and that's right about where we've got to at the moment, around 138.85. So this could be the beginning of where the momentum fades, but again, the market looking pretty strong. You can see just classic price action really. Two peaks, rallies up, breaks it, pulls back, perfectly tests it, rallies up through there, tests that peak after that 1 day decline, and rallies up from there. So all looking, the 4-hour period decline. So all looking pretty strong, but just be aware of this resistance coming in through here. If we do get through 139, then it really does look like a solid double bottom patterns in place, and you'd look for, this was roughly speaking 200 pips the size of the pattern, so you'd be looking for 200 pips above the pattern, which from 139 would be up to 141 and you know, close to where the pound peaked before. Okay, looking at dollar yen, also a big level broken. You know, we'd had these couple of touches through here and a big leg through it today and down to the 108 handle. Well, we've been on the handle for a while. We're almost dipping through 108 down to the 107 handle. And again, it's a situation across all these major pairs. The dollar's gone through a couple of weeks of weakness, but that's coming off the back of a strong overall uptrend. So it's possible that we get a retracement here. So even though this is looking very weak, you know, there will be people wanting to buy into the weakness, and it hasn't worked so far, but you know, it certainly could soon. 108 is one place it could. If the price continues to drop, then we down near the 50% retracement of this big rally is the 107 level. And given that we've taken these lows out, you know, let's see what happens by the end of the day to see if we can get a lower close below this level to confirm. But if that happens, I think the 50% and the 107 level, they seem like natural downside targets for this this drop to continue. But again, looking at this weekly chart, again, we've only just started the new week, but you know, it's already been going down for a couple of weeks in the space of an uptrend. So maybe some dip buying opportunities, but just the market short term looks pretty weak. And looking at Aussie dollar, you know, we mentioned this fake out below the bottom of the head and shoulders pattern a while back. And said that you know, if we get a break above this trading range, then the natural target would be the shoulders of the head and shoulders pattern. And again, another bullish engulfing pattern happening today, not at the bottom of a trend, but you know, but certainly more like a continuation version of the engulfing pattern. And it does look like we're going to end up testing these this neckline here through here. It's a kind of a zone, but somewhere through that, somewhere in the lead up to 178.50, 0.7850 looks like where the price is heading. That will be an area of resistance. If we get through it, then again, it looks like a move up to all-time highs. And considering we've got the 200-day moving average way below us here, you know, we're in sync with the broader uptrend. Having a look at oil prices here, you know, we'd mentioned these series of inside days last week and just said that's a potential setup. Is just set your you know, set your stop orders or your, you know, get ready with the market order on the outside of this range, and theoretically that would have worked without a false break. Sometimes you get a move one way and then it's, you know, it's a fakie and it turns the other way. This time it was a clean break. I think it was Wednesday or Thursday last week. Broke out of the range, took out those old highs near 62, and then interestingly we're just pausing between the 50% and the 61.8 Fibo of this drop. So it's certainly possible that we've broken the strong uptrend and that people are buying the dip, but there's also people that were buying up here that are looking to sell the market once it gets close to 65 again. So this range from 64 to 65, you know, is potentially an area where the market rolls over. I would just go on the basis that the trend is still up, and we're just pausing at these natural kind of Fibonacci levels where people will place targets. But I think overall, if we are going to turn lower in oil, I would imagine first we at least need to test the old highs near 67. But you know, let's see. If you do get a break back below the 50% and a daily close below the 50%, then maybe this is the peak to trade for a much more sweeping correction down towards the moving average again, down towards the 200 DMA. At the moment, let's just assume the uptrend is, you know, paused for a while, but it's the uptrend. We've got a positive bullish breakout of this these inside days, and so let's assume that's a positive thing for now. Now we're having a look at the gold price. As as mentioned before, we basically had this double bottom pattern in below 1700, and what was nice about this is we managed to catch it early. So there's different ways of trading the double bottom pattern. What we had mentioned early on is that while we had the rally off the low, you can trade it, with a low risk to reward underneath the low, giving up the trade underneath the low, but trade it early on in the bottom of the price range, and you obviously have a bigger risk to reward, but also a greater chance of failure. Now we've had this. Now the second option has emerged, where we've actually broken out above the double bottom pattern. That happened midweek, where some more of this dollar weakness really kicked in. Not to go too deeply into the fundamentals, but what was really interesting last week was that we had some really strong US economic data. First, it was CPI, which came in ahead of expectations and is well above 2%, which is the Fed's target level of inflation. And on Friday, we had some really strong retail sales. Obviously, it's a good year-over-year comparison from the pandemic last year, but actually even the month-over-month numbers were juiced up because of the stimulus checks that got sent out. So some really good economic data, but the dollar fell on that data. So that's always an interesting signal in the market when a price reacts negatively to good news. And that's what we're seeing in the dollar now, and we're seeing some follow through on that with some strength in the other currencies, strength in gold, more weakness in the dollar. So if we go on the height of the double bottom pattern, we're potentially looking at an upside target here. And again, this is purely based on an objective of the pattern. It doesn't have to work, but 1830 would be the upside target. And you've got these this interim resistance here from this old peak, which comes in at 1815 if you've been a bit more conservative about it. Obviously, from current price levels, we've had quite a decent run up already. The risk to reward probably doesn't favour an 1815 target. But if you think we're off to the races now in gold and maybe even test the, remember we're still on the underside of the 200-day moving average. But if you think we're going back to test the 200 DMA around 1850, still a good amount of room to go from here. And let's have a look at the stock market. Nothing's really changed from how we had things laid out last week. I'm going to make pretty similar comments, just saying that we're in a very steady uptrend and that kind of classic TA is working at the moment, whereby, you kind of, you move out the way, you line. You put in a high, you break above it, test it, test the high, test the low again, break higher, test the previous high, rally up. So, maybe if we get a drop again, we come back, test the trend line. At some point, this trend line will break, and that won't necessarily mean the end of the uptrend, but it means the momentum has slowed. And I would suggest after such a strong run, look at how since around March 25th, we've just gone almost in a straight line, and there wasn't really much of a correction from the previous peak. So really starting at the start of March, and now we're obviously 2/3 of the way through April. We're talking 6-7 weeks of just really prolonged strength in the market with only a couple of down days to really even get people worried. So the market's getting pretty overbought. Let's see if we insert an RSI, go for the default 14 standards. You can see pretty overbought in this market. Look how we've dipped back on all these previous occasions during this rally. This goes back as far as the US election result and the vaccines last year. At the start of November, the stock market really kicked off. We've been contained at the 70 overbought level over time, so it's been quite a reasonable rally. Obviously it's had dips, but it's been steady. But it's really taken off in the last 6 weeks, and we've got ourselves into this overbought territory here. So that's potentially a signal that maybe a deeper correction. No, nothing to get too spooked about, but potentially one of these Last time we got big overbought here, stay overbought for a while, and then you suddenly, crash down and you have more steeper correction. And maybe, and that would be kind of classic because we're approaching May, and that's the old adage is sell in May and go away. And maybe we have one of those where the market doesn't kind of move sideways between May and September, and then makes its decisive move towards the end of the year. That's possible. That would be in keeping with the current price action being a bit oversold and being due a correction, and it would be in keeping with seasonality. But who knows? Oh, accidentally closed it. Anyway, and last but not least, Bitcoin. So we're supported by this long-term rising uptrend. It's clear as day that we're still in an uptrend. Here's the previous peaks that I mentioned before. We had a break higher. I would struggle to call this a false break. We did spend 1, 2, 3, 4 days above, and then we pulled back again. That's somewhat normal. But obviously we gapped back lower, and it's interesting how we had a drop on, I think that was either Friday or Saturday. I suppose it was Friday. We had a drop. We tested those old peaks. We kind of closed off the lows, and then over the weekend we just gapped down to this rising trend line. And so, it's potentially a dip buying opportunity. It has on previous occasions. But just looking at this rising wedge pattern, that tends to be, that tends to be a bearish pattern. At the moment, we've held the lower trend line. I'd be watching this rising trend line as well. We could get a bounce off there. A close between these two lines, I think, could be pretty ominous. And while I hesitate to go short Bitcoin because it's been such a strong market, you can clearly see that the momentum has started to fade of late. And, typically what you have is, uptrend builds, correction really builds strongly in the third wave, keeps moving higher in a kind of fifth wave, but, and then for the speed, the momentum of the thing kind of rolls, and then drops. So, who knows how far that drop would go if it were to happen, but this thing can move pretty quickly. So, shorting the market, a difficult one, covering some of your longs, not such as a difficult decision if you think the market's starting to look a bit bearish. All right. That's it for this week. Thank you very much for watching. Good luck with trading. Make sure to subscribe to the video, subscribe to the channel so that you don't miss next week's video. Thanks, everyone.